morning and welcome to Reuters Today. I'm Marian Bamard. Deutsche Bank profits plunged with second quarter net income down just 20 million euros compared with 798 million a year ago. Germany's largest bank is already warning of deeper cuts before it can return to growth. One major factor has been volatility in the markets caused by the low interest rates and partly a fallout from Britain's vote to leave the European Union. Revenues from its foreign exchange business also came in flat, with many customers buying alternative currencies to move away from the sterling pound in the wake of Brexit vote. This all comes as Deutsche continues to try and revamp its operations, and Chief Executive John Cryan has already said aggressive restructuring hasn't been ruled out. British chip maker designer ARM Holdings looking even more attractive today after reporting a 5% rise in Q2 profits. ARM Holdings agreed to a $32 million offer by SoftBank Group last month. The designer of chips for Apple's iPhone, satellites, and supercomputers said normalized pre-tax profit came in at $171 million, but couldn't give the full-year revenues because, of course, it's being acquired by Japan's SoftBank. Investors are optimistic the chipmaker will continue to grow after its takeover, with revenues already climbing 9% this year. Let's take a look at what stocks are making headlines this morning. Investors will be keeping a close eye on German giant Deutsche Bank, of course, under pressure after dismal numbers for its quarterly earnings and warnings of more spending cuts. Not a better picture for Banco Santander, the Eurozone's biggest bank, facing a 50% year-on-year fall in Q2 profits. That's off the back of charges linked to restructuring costs and payments into an EU bank resolution fund. Investors are also monitoring Bayer as the German drug maker looks to buy U.S. seed company Monsanto. This has been months in the making, and now with strong Q2 expectations have been raised that it could seal the deal. From one pharmaceutical giant to another, a dose of investment, that's the focus of GlaxoSmithKline, planning to invest £275 million into 3 drug manufacturing sites in Britain, all a part of its prospects to invest and grow in the UK. Despite last month's vote to leave the EU, Britain's biggest drug maker is holding firm and looking to expand operations on home turf. The move is partly thanks to lower corporate tax rates here in the UK, with the government promising to further cut those rates for companies that keep their operations in Britain. GSK is set to report its quarterly results, that is, later this morning. Strong margins and growing demand for new drugs boosted earnings by 14% in Q1, with expectations the pharma giant will remain on track, maintaining its attractive dividend for investors with a yield of almost 6%. Let's turn now to the markets to see how we stand in early trade. European shares cautiously higher this morning, with the FTSE 100 up about 0.3%. The FTSE Euro First 300 also higher thanks to stronger than expected earnings and strong numbers in auto stocks. That's it for now. Don't forget you can follow us on Twitter at Reuters Insider, and of course watch more videos online at Reuters.com. I'm Marian Bamard, and this is Reuters.